quickly get into a management call. Galaxy Surfactants came out with the numbers, just yesterday, and it was a slightly weak quarter for the company. Revenue was in line. EBITDA margins and net profit missed estimates. We have Mr. K Natarajan, Managing Director at Galaxy Surfactants, joining in for a quick chat. Mr. Natarajan, great to have you on. I'm just looking at the overall numbers. So 11% up on the top line, but the EBITDA has fallen by 6%. Margins have also come down. And, actually, I want to start with the margin question because this is not just a Q3 phenomena. If we see the last 2-3 quarters, your margins have been consistently coming down. So can you just tell us what the issues are at play? Is there pressure on pricing? And, how much did you do in terms of volume this quarter?
Yeah, thank you. Thank you for having me on the show. If you see, the revenues have gone up, but the volume is what we guide the market to. The volumes actually have been down by almost 1% globally. The major reason for that has been a 7% dip in volumes we saw in India, which has been the first time that we have seen such a huge dip. It actually got balanced by the rest of the world growing by almost 10% and Africa and Middle East keeping almost flat. We do see this as a one-off situation given the commentary that we hear from all our customers. And with what the government has announced in the budget, we do see consumption picking up. The margin essentially has been lower because, as we've been guiding the market earlier, is in terms of how the premium specialty volumes pick up. And that's something is not happening the way that we had anticipated in the rest of the world market. Even in India, we do see that the direct-to-consumer brands that were earlier very bullish, given the current sentiment, they are also going slow. So we do see this quarter as a one-off quarter, and we look to the coming quarters with a lot of positivity.
Sir, so you're saying, okay, that sort of helps us understand it. Overall volumes are down by 1%. India volumes have fallen more. Is your full-year volume guidance at risk? You had guided for 6 to 8% volume growth in FY25. Is that at risk?
Yeah, so up to 9 months, we had 4%. So with this sort of dip that we have had in India volumes this quarter, yes, that is at risk. So we probably should be at the close to almost 4% volume growth is what we expect.
Okay, all right. Hi, Mr. Natarajan. Good morning and thanks a lot for waiting by. Well, so 4% for this year in terms of volumes. What about FY26? Are you seeing recovery on ground that you can guide for better volume growth in FY26? And also EBITDA per ton, could you help us out? What was it for the past quarter? And earlier, I think you were talking about 20 to 21,000 rupees per ton. Is that on course?
Yeah, so our EBITDA per metric ton essentially is close to about 19,300. So we have been lower there as well. As regards the margin guidance for and the volume guidance for next year, I think we probably would wait till we meet again once we announce the full year results. By that time, we'll have good clarity in terms of how India is getting better. And with regard to our EBITDA per metric ton going up, we do see that coming back to the guidance range that we have guided the market to, based on the positive signs we see as far as the projection pipeline that's happening on the premium specialties with the rest of the world customers. So yes, we would wait to have a review of the guidance, in the next earnings call that we'll be having.
So, Mr. Natarajan, given what you're saying, that it all depends on pickup in demand here in India and what this budget does. But the way things stack up right now, I mean, you've come down to about, at the EBITDA margin level now, I'm saying, you've come down to about 10%. So do you see yourselves ending at around 10% in FY25, or could there be a pickup back again? Because you used to be above 12% till a couple of quarters back.
Yeah, so that, see, the way the commodity prices have gone up, we don't guide for EBITDA margins. We guide for EBITDA per metric ton.
Correct.
And if you see, EBITDA per metric ton has gone down by almost about 6%. Okay, and we do expect that we'll end the year around 19,500 rupees per metric ton, which is obviously lower than the guidance that we have indicated.
Got it. All right. So 19,500 versus the guidance, earlier guidance, which was going up to the higher end of it was 21,000.
Correct.
500. Got that point, sir. Just on, on your inputs, while obviously, the volumes are what they are, on the input side, What is the outlook on fatty alcohol prices? I mean, are they still surging or have they kind of eased out?
They have surged quite a bit, so they're probably almost close to double than what it was at the same time last year. And we do expect it is stabilized now, but we do expect it to start correcting in the coming months, given the sort of supply side, bullishness that is there in terms of the production going up. We probably will have to wait till next quarter to understand this, but as of now, it has gone up and stabilized. But then the point here is that it's almost double than what it was the previous year, which also is leading to some amount of sluggishness in demand because our customers are unwilling to take long positions given the high raw material prices.
Okay, all right. We'll leave it there for now. Good luck. Thank you very much for joining us and running us through what you're making of things right now. We'll take